Hi, and welcome to RegFacts. I'm Lori Peterson, Senior Regulatory Compliance Expert here at Mitratech's Continuity. We are doing a recap for October. We'll start with the FDIC's official sign and advertising requirements. The FDIC has extended that effective date. It was originally effective April 1st of 2024 with an extended compliance date of January 1st of 2025. Now you have until May 1st of 2025 to be in full compliance with those new requirements. The NCUA issued a final rule to incorporate interpretive ruling and policy statement and the Fair Hiring and Banking Act into its regulations. That gives you a bit more leeway as to who you can hire without having to file an application with the NCUA. This is implementing a law that became effective when it was signed back in 2022. This rule itself was effective October 30th. The NCUA also amended its share insurance coverage rules. They established a trust account category, and so that provides consistent insurance treatment for all mortgage servicing account balances and provides the NCUA more flexibility when they're determining share insurance coverage in liquidation. Most of the amendments are effective December 1st of 2026, but there were certain amendments that were effective October 30th of 2024. We have our usual asset threshold changes that are effective January 1st of 2025. So we have consumer leasing, which is Regulation M. That threshold is being raised from $69,500 to $71,900. So transactions above that threshold are exempt from the Regulation M disclosure requirements. The HPML appraisal threshold will increase from $32,400 to $33,500 for next year. Transactions that are equal to or below that threshold are exempt from those Reg Z appraisal requirements for HPMLs. Then also with regard to Reg Z, consumer loan exemption threshold will increase from $69,500 to $71,900 for next year. And again, the transactions above that threshold are exempt from Reg Z disclosure requirements, although we know that many of our clients at least do provide those disclosures because it's just simply easier from an operational perspective. The OCC adopted a final rule to amend its procedures for reviewing applications under the Bank Merger Act. That becomes effective January 1st of 2025. We had a couple items from OFAC. They adopted a final rule that clarifies their process for issuing certain orders that block or identify as blocked certain property or interest in that property. That was effective September 17th of this year. They also amended their reporting procedures and practice and penalties regulations to add several exemptions. And they also issued related frequently asked questions. Those were effective November 7th. In other items, the CFPB issued a circular regarding overdraft opt-in practices. What they found was that some institutions were saying that consumers had opted in for overdraft protection for one-time debit card transactions and ATM transactions under Regulation E, but they had no proof of that opt-in. So the CFPB is clarifying that if you are saying that someone has opted in for this overdraft protection, then you need to retain that evidence if you wish to charge them with overdraft fees. The NCUA issued a letter to urge their credit union's board of directors to prioritize cybersecurity as a top oversight and governance responsibility. As you know, cybersecurity has been in the news very much lately, and so the NCUA wants to make sure that their institutions are doing their part. Had a couple items from FinCEN. They issued an alert to help financial institutions identify funding streams that support Iran-backed militia and Hezbollah. They also renewed that geographic targeting order, which they renew periodically. Now they have a proposed rule out, and once that rule is issued, it is likely that this geographic targeting order will be rescinded. Then we also had another item from FinCEN. They issued a final order to prohibit certain transmittal of funds by any covered financial institution involving PM2BTC, which is a foreign financial institution that FinCEN determined was a primary money laundering concern. That was effective October 11th. As far as proposed rules, the CFPB issued a proposal regarding remittance transfer rules to clarify when consumers should contact the CFPB and the state agency that charters that remittance transfer provider. What they're finding is that many consumers are contacting the CFPB first about a specific transaction. The CFPB simply can't help them because they don't have the transaction details. And so really the CFPB is just there to receive complaints about the remittance transfer provider, not about a particular single transaction. The FDIC extended their comment period on their Change in Bank Control Act regulations. And then they also extended the comment period for the deposit data request for information. And this they issued because they wanted to gather more information, particularly about broker deposits. We had many issuances on the various hurricanes. The CFPB also issued an advisory opinion regarding medical debt collection and the fact that their 2025 beta HMDA platform is available. The NCUA issued a few manual updates. They also issued some alerts regarding appointed directors and artificial intelligence. The OCC released their 2025 supervisory operating plan and also updated their bulletin regarding commercial lending refinance risk. We had a new IAT exception request from NACHA. The NCUA also issued resources for their credit unions that were affected by Hurricane Milton. OFAC has updated their FAQs, and the FDIC has issued information regarding call report instructions, as well as their bank merger policy statement. And that is a summary of our activity for October. We will see you again next month. Thank you so much for joining us.